In today's video, I want to introduce a new version of RSI that is integrated with linear regression and it performs much better than the original RSI. Just make sure you watch this video until the end because I'm going to teach you a trading strategy based on this new RSI, which is very accurate and highly profitable. Alright, to add this amazing indicator to our chart, here we click on indicators and we search RSI with self-adjusting linear regression bands. This one, which is written by Zierman. Alright, this is the indicator, and before I start explaining its components, let me change its settings so it will be more clear on our chart. Here in the style tab, here for the mid curve we set the color on white, and then here for lower curve fill for color 0 we increase the opacity to 100%, and then for upper curve fill for color 0 we similarly increase the opacity to 100%. Alright, now our indicator is more clear on the signals that it's generating. First, let me explain the different components of this indicator, and then I will teach you a trading strategy based on this indicator. This white line in the middle is regression line. This green line is upper curve of our regression channel, and this red line is lower curve of our regression channel. So this is our regression channel with this middle curve, which is our regression line, and these upper curve and lower curve, which are placed above and below the middle curve. And here we have this line, which changes color between blue and red, and this is our RSI line. And you can see that in times that it goes above the upper curve, the area in between becomes green, and when it goes below the lower curve, the area in between becomes red. In times that we have our RSI above the upper curve and actually have our indicator in green color, we have increased upside momentum, and when it reaches to overbought level, which is set at 80 in this indicator, it's a sign that probably we're going to have a reversal. And similarly, when RSI goes below the lower curve and we have the indicator in red color like this, it's a sign that we have increased downside momentum, and if it reaches to oversold level, which is set at 20 in this indicator, it can be a sign for a reversal. Please pay attention that having this indicator in green or red actually shows excessive pressure in the market, and we can expect that when they happen, we're probably going to have a turning in the market. In some cases, it's a complete reversal like this case, and in other cases, just a pullback or just a short pause after having the indicator in green or red. But the strategy that I'm going to teach you is not taking reversal point of the market, but we're going to take advantage of these increased and excessive momentum to enter a trade in the direction of the overall trend. For this purpose, we add another indicator, CCI, this one, Commodity Channel Index, and we need to change its settings so that it can show us the overall trend of the market. Here in the inputs tab, for the length we set it at 100. Alright, now this CCI with this settings will help us to identify the overall trend of the market regardless of the short-term fluctuations. When it's above 0, the market is considered to be in an uptrend, and when it's below 0, the market is considered to be in a downtrend. So whenever we have RSI line above the upper curve or below the lower curve, we check with CCI to see if we should enter a trade or not. For example, here you can see that our indicator turned to red and we enter a trade only if CCI is below 0. So this is a confirmed signal, and we can enter a short position here as this new candle is opened. The stop loss for this trade is placed above the previous swing high, and the profit is set at the level that makes risk to reward ratio equals 1.5. Before this trade, here you can see that the indicator turned to green, but when we check the CCI, we can see that it's below 0. For long position signals, CCI should be above 0, so this buying signal is rejected. Moving back on the chart, here you can see that the indicator turned to red. CCI is below 0, so it's a confirmed signal, and we can enter a short position here as this new candle is opened. And as you can see, this trade is a profitable trade. Before this trade, we had a buy signal here, but it's not confirmed because CCI is below 0. And for these buying signals here, you can see that for them CCI is below 0, so these signals are also not confirmed. Moving back on the chart, here we had a short position signal where the indicator turned to red, and it's a confirmed signal because CCI is below 0. So in practice, we would enter a short position here as this new candle was opened. And as you can see, this trade was also a profitable trade. Alright, moving back on the chart, here we had a short position where the indicator turned to red, but it's not a confirmed signal because CCI is above 0. And before the signal, here we had a buy signal where the indicator turned to green. And when we check CCI, we can see that CCI is above 0. So it's a confirmed signal, and we can enter a long position here as this new candle was opened. The stop loss for this long position is set below the previous swing low, and this trade is also a profitable trade as you can see. Moving back on the chart, here we had two short position signals, but none of them are confirmed because CCI is above zero, and here also the indicator turned to red but not confirmed by CCI because CCI is above zero. Moving back on the chart, here the indicator turned to green, and at that time CCI was above zero, so it's a confirmed signal and we can enter a long position here as this new candle was opened. And as you can see, this trade is also a profitable trade. Before this trade we had another long position signal here, but it wasn't confirmed by CCI because it's below zero. This buy signal here also not confirmed because CCI is below zero, and also this one not confirmed because at the time CCI is below zero. You can see that at the reversal point of the market we didn't have any false signals and this strategy performed very well. Alright, moving back on the chart, here we have a short position signal where the indicator turned to red and CCI is below zero, so the signal is confirmed and we can enter a short position based on this signal here where this new candle is opened. Another short position signal we had here where the indicator turned to red, CCI is below zero, so another short position could be entered here at this point, and another short position signal we had here, and CCI also confirms because it's below zero, so another short position could be entered here at this point, and we continue like this. Please pay attention that in times that the market is not trending and it's in a trading range, like here in this part, we can encounter false signals like this where the indicator turned to green, CCI is above zero, so it's a confirmed signal, and in practice we would enter a long position here, but you can see that the market didn't advance, and after a while we had declining of the price, so this position would end up in loss. When the market is in this situation, I mean it's not trending and it's in a trading range, the probability of having false signals will increase because this is a trend following strategy and it doesn't work well when the market is not trending. So we need to add another layer of filtration that can help us with this situation. In other words, we need to know when the market is not trending, so we stop trading until the market starts trending. The most effective way for identifying non-trending market is price action analysis, but there are also some indicators like ADX, this one average directional index, that can help us with non-trending market. If you have any experience with this indicator, so you know that when ADX line is below 20, it shows that the market is not trending, so we could easily avoid this false signal because at this time ADX was below 20. Please pay attention that no indicator or strategy is able to generate 100% guaranteed signals, and losing trades are always part of the game, no matter how accurate is the strategy or how much experience has the trader. The important point is that you must manage your risk properly, otherwise you will lose your trading account in very short time. There is a risk management strategy that is called 1% rule, and it's a perfect choice for active trading. I have a complete guide on this, the link is also placed in the description of this video, and I highly recommend you to watch it because without a proper risk management strategy you cannot become a successful trader. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video and good luck with your trading.